Good afternoon, guys. Hey, this is Bruce Marshall from Simpler Trading with the nightly video update for Wednesday, May the 5th, which is Cinco de Mayo. So happy Cinco de Mayo to everyone. Hope everybody's having a great day and enjoying Cinco de Mayo. So let's jump in here, take a look at everything. The market was kind of so-so today. Overall, this is the Dow. Normally we look at the S&P, but I want to look at the Dow. We hit a new all-time high in the Dow here. The S&P and the Nasdaq did not do as well, but let's check it out. Check this out. So here are my voodoo lines. We're actually way up, even up above most of the voodoo lines that we've got for the Dow. And as with all the other indexes, this kind of relentless push higher, higher, higher. It's a beautiful chart. It's bullish, bullish, bullish. There's nothing whatsoever bearish about this. Even yesterday with Janet Yellen kind of sticking her foot in her mouth with, just a week before or 4 or 5 days before, she said no sign of inflation, and then she said we may have to raise rates because of inflation, and then she came back and said no inflation. If I didn't mean the Fed might have to raise rates, and it makes me wonder. But anyway, we didn't get anything really out of that. And if you look at the S&P, yesterday seemed like a pretty good excuse me. Initially, I thought this might be the turning point, right? Because we've been talking about this, crazy run higher, higher, higher. If we put this on the Bollinger Bands here, or Keltner channels, we can see we've been pushing 3 ATR here for a little while now. And typically what happens, I pointed this out before, when you hit 3 ATR right there, you slam back down at least to the mean. Here's 3 ATR, came all the way down to the lower 3 ATR here. 3 ATR, you come all the way down to the lower 3 ATR here, you touched it and pulled back, here, and pull back to the mean, and then we just kind of been riding up, and then here we get back to 3 ATR, and we haven't pulled back at all. And this is kind of crazy. It's a 1-year chart, and 1, 2, 3, 4 times before we hit the 3 ATR, we pulled back, and here we really haven't, but you can see the Keltner channels are compressing. You can see right here, you see how they come in. So what that means is the mean is kind of coming up. In other words, they're all kind of turned up, and now they're all kind of compressing in together, right there around the mean. So what that tells me, at least on the S&P, is for now things still look good. There's no panic. Yesterday, I think we were down, if I remember correctly. Let me switch this back to voodoo lines. I think we were down 1% or something, 0.9 or something. Not much. It was not that big a deal. I think at one point we were down 47 or 50 points or something like that on the ES. Not that big a deal. And, kind of the same thing with the Nasdaq. Now we are seeing a little bit, let me put the NDX up here. We are seeing maybe a little something different here on the Nasdaq. A more meaningful pullback, and what we're having is, at least momentarily, it feels like a little sector rotation. I don't even want to say that yet as Bruce said it was sector rotation, because it's not. It's just a simple pullback. But maybe this does turn into something here. Notice again, this is NDX. This is more meaningful. If you look back some of these other moves here, maybe this turns into something. I don't know. Does this turn into something? Come back down here, or here? I don't know. I don't think it does. Not yet. But we'll see. The thing that we're all watching now is, we got jobs report coming up, but we also are watching the Fed for them to accept or deny or comment on inflation, I guess, in a meaningful way. So far, they've been saying we don't see any inflation, and everybody else, out in the real world with seeing pricing movements, is saying, inflation's coming and all that kind of stuff. So I don't know which way that's going to go. Not really a way we can play that yet, but if the Fed does say that we need to start raising interest rates, you saw what happened when Yellen mentioned it. If Powell mentions it, it's going to be a different story. We will go down pretty fast, I think. And I do think that will happen at some point in the next several months. I don't know how long they can keep not seeing inflation, maybe is the right way to put it. But again, I don't know. So again, I'm looking at this, trying to figure out, how do we play this? And for now, at least, until we see more of a meaningful pullback in the S&P, or more of a continuation in the major Nasdaq stocks, and that's the FANG stocks. You got Facebook, Apple, Amazon, Netflix, Google, etc. If we see those continue to be weak, the Nasdaq does tend to lead. So the Nasdaq can, maybe the S&P just hasn't caught up yet. And maybe the Nasdaq's already done this, and maybe the S&P comes back down. I've been targeting that 4100 for a little while now, probably about, you guys have heard me say this over and over, from all of this. If we look on let's do a 20-day chart here, I've been thinking that we were going to pull back here, that this is SPX, fire line, see the red line, fire line. Thought we'd pull back there, we didn't. Bounce, came back down right to that micro line. Thought we'd come back here and test it, we didn't. I thought here the other day we'd come back down and test it, we didn't. So maybe this thing does finally come back down here into, so there's 4100, that's actually 4083, which is my secondary target, is 4083. And I'm using the ES 4100 here, as you can see, for trading purposes. So again, same thing, didn't come down here, didn't come down here, didn't come down here. Is this it? I don't know. So we got to be careful here. We could go either way. I think the massive gap run, breakaway gap higher kind of stuff is probably not going to happen now. We may keep melting up, but we're through earnings season. All of the big announcements are pretty much done now. We are back to what's the actual economy doing. We'll get that from employment numbers and consumer spending and PPI and all that kind of stuff, CPI. But for now, I think all of the big news is out. So maybe we chop. I'm kind of positioned for some range-bound chop, say 41. Let's get a broad number. Let's say 41 to 4250. Kind of range in the S&P. Now, outside of that, we can cherry pick some stocks, but I'm not seeing a lot that I really want to get too long on. I am long Disney. I will say that ahead of earnings next week. But it's not a large size. I don't have any large size on really anything right now. I'm just being very careful, and I'm trying to be strategic and wait and choose my trades very carefully. And I think that makes the most sense right now until we can get a little more clarity in the market, because this just doesn't tell us anything at all. And again, if we look out here, if we look at this, let's just play odds here. What are the odds that we go substantially higher from here, or what are the odds we pull back a little bit? Maybe we have 5% up and 10% down, maybe, or 5% up, 15% down. I don't know. And again, I'm not predicting that, because I think we do pull back, and I do think it mirrors some of these other prior pullbacks, but that may not be for months. The way this thing keeps melting up, that we could just keep on grinding higher. So all that being said, I'm looking for range bound chop here between 41, 4200 perhaps. Maybe we go down and a little bit lower, and maybe we go a little bit higher if we keep going higher, but it's a tough way to play it right now, and I think the safest move is to, if you're trading, is to stick with cash and choose your entries very carefully and use tight stops. So that's what I've got for us today. Hope that helps. Hope it makes sense, and I will see you guys at the next update. Thanks. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me